Bloomberg Radio Plus app, free for iPhone and Android devices.
Anthony Dwyer is Chief Equity Strategist at Canaccord Genuity Securities in New York, and he's on the line with us now. Good morning and welcome, Anthony. Seems between the severe weather and the way investors have been spreading their money around, it's been something of a freaky February, huh?
Well, no, it's kind of indicative of a low inflation, solid growth, albeit slower growth environment. We actually raised our target on the S&P 500 this morning up to 2185 from 1955, which indicates about a 17% upside for the year.
Now, commodities climbed in February, the most since July. Do you see that continuing, or will the global economy be dealing with more anxiety in the emerging markets?
I think the global economy is going to be dealing with a little bit more anxiety. You have a drought in Brazil, and you have the cold weather in the U.S., and some tensions, obviously, in Ukraine and Argentina. So you do have some kind of non-fundamental reasons for some of the moves in the commodity prices. But again, when you have a slowing global growth environment, it's good for U.S. stocks, but it's not and global stocks. It's not necessarily good for commodities, because you tend to, after the kind of run that we had in the last cycle, you tend to overproduce, oversupply, and the demand just doesn't match up with it. So we're not necessarily negative on commodities, but I don't think that as an asset class it's going to certainly outperform equities.
2185, huh? All right. Hello, welcome in from Sunnyvale, California. I'm Mark Vierra. This is my weekly video, technical analysis video that I do, complimentary to my trading log, which I'll have links for all you YouTube viewers in the About section. You can check out what I'm trading, what I'm doing. Otherwise, this video is just my thoughts on where I think the market is heading for the week. Not any buying or selling. So let's get into some longer term charts first, as I always like to start with the monthly. We're looking at the S&P 500. This is just a basic trend, kind of a rising wedge-ish channel that we have on the monthly, and then I'm going to zoom in here. Let's cue that up. So here we're zoomed in on the monthly chart. I have just drawn in here. This is just a flag type formation. I have measurements. It's more defined on the weekly chart. And what I am looking for this week is, oftentimes once price breaks out of a pattern, you'll see that it will want to retest these support levels. So that's what I'm looking for. That would be a secondary confirmation too, when we get support off of what was previously resistance. So we have broken out of the flag. We've broken out of, we have a lot of chart patterns in play I'll get into later. The other thing we want to look at here is that this candle is engulfing the previous candle. So we have a bullish, monthly charts, the longer term charts are extremely bullish. The other thing that I'm looking at is type of sometimes it's called a scissor. It's a form of a piercing pattern where you have a little bit of a lower wick after a bearish candle, and then it's bought back up, and it's a good, one of my most favorite candlestick formations is the tweezer bottom reversal, and you'll see a lot of those in the monthly chart. In fact, the next chart, let me cue that up. So here I've queued up. What I'm looking at is, and the line that I've drawn here, this is a long-term pivot, just off the lows and just ignoring everything else, just picking up these two lows here, and I've got this what I call a pivot. This is just freehand drawn, and you can see where we're in an upper trading range up here, and we've fallen below, and that's just to signify that we are not so parabolic on the monthly longer term charts. We're actually below the pivotal trading range, where a pop above this 1900 level would put us in an upper trading range. The other thing I'm pointing out is too, and you look at these little tweezer patterns, some are better than others. Like, I don't have much of a wick on this one, but when you have a bearish candle bought up by a bullish, bearish candle bought up by a bullish, I'm going to go ahead and call that a reversal. All right, and you had it here, okay, you another one. Now this one doesn't look like much of a bought back up, but in my book, if it's over midpoint of the previous candle, it qualifies. All right. So, and that's what we have here. So the monthly charts are extremely, longer term charts are bullish. I'm just going to file that back in the corner of my head, and let's move on to the weekly charts. I'm going to cue some of them up. So here's the weekly chart of the S&P 500. I have a blue dashed pivot within a channel, and that's just a wide lens view to show you where the trend lines are drawn. And now zooming in a bit here, let's talk about some of the things I'm looking at. Is a pivot above that key, what I'm calling a pivot, longer term pivot, intermediate to longer term, and now that previous resistance is now support. Okay, that's the other thing too is you can also see the prior resistance in here, so that's another area to be looking at. Now in all likelihood we will test this area, and possibly, let me put this back in here, good enough, a secondary test off of this, I think, and hold price, I think, would be a good bullish sign. Okay? So the next two weekly charts is same kind of channel. It's more of a nearish term than the longer term. So it's just what I want to say is just a closer view of the channel. So it's less intermediate term and more near term. And this is just a wide lens view to see that, and we'll zoom in on that and go over a few things here. So previously we had this broadening, okay, and I was counting the touches, and I said we had more touches on the resistance. So that would tend to think, the bulls are banging their head on resistance, they get mad and they stampede. So this is kind of the way I'm looking at it. Now, kind of a small rising-ish wedge. So the weekly is getting into a bit of a parabolic move. All right, that's another reason why I think that the, from this area, these highs, I think would be a good spot to see some secondary support. Now we hold those prices, I'm going to say we're in full tilt bull mode. All right, that's going to be quite bullish to me. So I think out of the gate, and I'll also get into volume, and we have some interesting things going on in volume too to confirm some of this stuff. So I think out of the gate, I'm leaning for a gap down in the market that will be bought up. So we'll see how that plays out. That's my prediction. Last week we were looking at this, I was looking at this as a hammer eye, and I noted that a bearish hammer eye is more often a bullish continuation, and that's what we had. The other thing we were looking at, I don't know why I keep saying we, I was looking at, all right, these upward tails are telling me that price isn't ready to make that move. Otherwise, you'd have a nice stiff top in here. I know my lines are crazy. But a little bit of a weekly topping tail, that's another kind of an issue that gives me the idea that the 1841 to 1850 area down in here is the area of where I'm looking for stiff support. So we'll see if that plays out to how I'm looking at it. So the next chart I have queued up here is a Fib Extension. This is on the weekly time frame, looking at from some lows to these highs, and then the latest pullback that we had. And I'm always saying how this 50% is a key level, and we had the expected type of resistance that I would expect to see from a 50% fib, and we've broken through that, and now we're looking at the 61% as resistance. That's 1863. A lot of these fib numbers jive with the chart patterns. I like looking at the Fib Extension and the retracements. I think the Fibonacci Fibonacci numbers are pretty cool. Another study that I'm quite fond of here is this Ichi candle, and I'm looking at it at a long-term time frame. You know, you can look at this on different time frames, and these areas that presented themselves in red here as buying opportunities, this is what I'm looking at here. The next thing now I want to see is a big green area like this to start forming up here. So that's what I suspect is going on. I don't think this leg is done with. And what else I've got? Measured move, weekly round top. A lot of these patterns are in play now. So let's go through these patterns since we do have them in play. This was our confirmation break. You know, we had a fake out confirmation break to the downside that actually met our downside targets. Now I think we're going to be heading for the upside targets in this. The next one is the weekly flag. And I should pause and cue these up, it'd be better. So again, we had you know, what I often say my conspiracy theory is the operators, they want to fake out, you know, one way, run stops, and then, you know, take it to its direction. Here's our confirmation break, same level really as the, you know, many of these patterns are going to have this 1850 resistance as the confirmation break. And that's on the weekly. Those are weekly chart patterns. Now let's move into some daily trend. Okay, I'm going to start off with the wide lens view. This is the channel that I have drawn in here. And then we'll zoom in. And here is the inverted head and shoulder main support that is now a pivot. We've broken above. I'm expecting a secondary test off of this and see if this holds. If not, next area of support would be down in this area. And so this week I'm looking at the range here. Okay, that's nothing big and complicated in there, just basic trend lines. You know, the basic fundamental foundations of technical analysis begins with just a simple trend line. So this is another daily. This is now more of a near-term channel that I'm looking at. Same thing. I want to see if we can hold prices at this area. If not, this would be the next area. I don't think we're going to get much further down than that. That would present buying opportunities, and the market doesn't like to give people opportunities. Wants to shake out speculation. This is what the market does. It's very good at it. So and we'll get into volume 2, and I'm going to point out another little modus operandi of the market, and we'll get into volume here in a minute. So just a quick look at Bollinger Bands and moving averages. You know, I'm still looking for the Bollinger Bands to do a contraction, okay? And we're also seeing the rising 20-day moving average coming in closer to a cross here. But I want to see these Bollinger Bands contract, okay? And sometimes we'll get a reversal. Maybe we will get, you know, some downside tests of supports off of a Bollinger Band contraction. Don't put too much into moving averages or Bollinger Bands, but I like to pay attention to that stuff. Here's a daily pattern worksheet. Let me cue this up. So contradictory to the longer-term bullish charts, I am seeing some bearishness with these up-thrusting candles. Okay, this spinning top here is showing me of some indecision at the higher prices as of yet. And I have, this is the inverted head and shoulder neckline in here, and this would be the top of the flag. I think that would, you know, some secondary test of these supports, and if price can hold this level, I think we're going to see what I call a or it's known as a springboard type of, also have some a diving board type pattern, and it's acts like a diving board, you know, springboard effect. So these supports hold price. You can see a really firm bounce is what I want to say. So what else am I looking at here? Not much else in patterns. I'll show you the measurements that I have in the flag and the inverted head and shoulder. Went over in the previous videos how interesting it is to have inverted head and shoulders at the top of the market like this. Let's just open this up. You know, this round bottom. Here's our confirmation break line. Next, here's our daily bull flag. Okay, and here's our targets. Here's an interesting chart. Let me open that up. So midweek, I was just drawing some lines in here at the how the market likes to move forward and then do kind of a back and fill, you know, move up, consolidate, and now what happened was we had that springboard move. Okay, still with this indecision type of spinning top. So I just put in here a possible scenario is pull back to, you know, this previous support and see if we get a little kind of a springboard action off of that. That's what I'm reading into there. The other is look at the diving board. Let's see, midweek. No, that's the same chart. Let's see. Here we go. Yeah, I posted about this midweek, that this support here could be a good diving board type of launch, and so consequently that's what happened. Here's the diving board that I was looking at. You know, little back and fill action, move forward, you know, back and fill consolidation, and, you know, springboard up to the next level. So that's what you know, these supports can do. Here's the inverted head and shoulder, you know, popular pattern. You know, head and shoulder in general is good, is pretty good in terms of performance. Here was the neckline break here down at 1845. I think 1849 would be a good spot to find some support off of that. That's what I'm looking at, chart patterns. Now, let's get into some volume. So volume is sort of confirming these upper levels as stiff resistance and gives me the idea that we'll see a little bit of a pullback. This is previous selling climax volume levels, and we have really less volume in terms of our buying climaxes. And along with these topping tails up here, with a, you know, somewhat above average volume, you know, tells me that we're going to see a little bit of a pullback to supports. A little more, you know, we moved up, now we're going to back and fill and test these support levels. I was also mentioning how the, you know, in the profile chart coming up next too, this point of control is moving upward, closer to the value area. So I think this point of control is going to be the ultimate line in the sand. If we break down below these trend lines that I've drawn, this I think it will be ultimate support in there. We'll see how that works out. So here's our hourly volume chart, and these two candles represent the last 2 hours of the trading session for the month, for the week, and for the day. Now, normally you have positions closing, and you know, typically you'll see a bearish candle where intermediate term traders and you have you know, balance sheets being cleared out for the week. This month now, the very last candle was bought up, so that is a good sign of short covering, to clear the month. So that's another reason now if, as I said before, the market likes to shake out speculation. They're getting the shorts to cover, so who's next? It's going to be the buyers. So, we saw how we were having bearish volume increasing on the move down. Now it's turning bullish, where we see increasing volume on these move upward. So volume is turning bullish, but I'm expecting a little bit of a pullback. I think a gap down lower, and I believe that it'll be bought up. Let's take a look at some composites. Really not seeing too much more in the market profile and the composites that are noticeable really in the in just the standard volume. But Thinkorswim has two flavors of market profiles: expanded and non-expanded. Take a little bit of a look at both of these. We did see a shift upward in the point of control. This is a 6-month point of control, by the way. Point of control is where the majority of volume by price, most activity is changing hands. And then you have these shaded in here is these playground areas. That's where 70% of activity is taking place. And within that playground, you have another type of point of control. It's called the time price opportunity, and that's where the majority of shares are changing hand by volume by price within that playground. So we have just different things to look at when you're looking at a profile. And one of the things that you want to also note too is when price is falling out of the playground like it did here, it's sort of like a magnet attracting to these playgrounds, to the time price opportunity, and to the point of control. And we're seeing the same thing up here. We're getting outside of the playground, and we're just popping back down in here like magnetic attraction to, and it works both ways. You're going to see the point of control and the time price opportunity gravitate towards price, and price gravitate, towards each other, basically what I'm trying to say. Now, I'm going to clear out these lines. So that's another reason why I think we're going to see a little consolidative back and fill to start off the week. I do think it'll be bought up. The longer term trend is sort of an undeniable thing. Now, here is a monthly composite. This is the whole month of February in here. Okay, this would be January, this is February. And I was remarking on how, we would likely see a P-shaped profile this month, and that's sort of what we have. I'm not calling that, you could say this is, it's really subjective kind of stuff when you're looking at this, but we did get a P shape, what I was looking for. I think what's going to happen now is our initial balance. This is where it's called the initial balance, this green line. This is where it started off. The initial trading started off for this composite. And now what I think we're going to see is the new composite will be over in this area. I think we're going to see an initial balance coming down to test this point of control. And we'll work our way from there. And the next shape I think we're going to see is more of a B-shaped market profile, and we'll get into the weekly composite. But other than that, I'm not seeing any much more to confirm my thesis on the gap down, pullback, consolidative test of secondary test of support, other than just your the standard volume by price charts we're just looking at. But we will look at the last composite, volume composite that I have here. These are weekly composites. Now, last week I was noting how just excellent structure we were putting in this bell curve, just a D shape. Some traders call it D shape. Peter Seidelhuber calls it a bell curve. I call it a bell curve. Peter Seidelhuber pretty much started off these market profiles. Sort of a genius when it comes to volume, especially volume by price. Good video too that he put out on order flow. In any case, last week the TPO and P point of control amid the initial balance. Nice D-shaped. I thought that was just excellent, solid structure going on there. And now, consequently, this week we have a little bit longer of initial balance, and our point of control is lower on that point of initial balance. TPO is midpoint, so we still have a nice bell curve here, but this point of control that's lower, I suspect that we're going to see a little bit lower prices coming out of the gate, and you know, this point of control goes all the way back to last week's TPO. I think we're going to find really solid support here at this level. I really would be surprised if we broke down below that, but I'm going to be looking for a B-shaped profile. Let's see, here's price. I think our initial balance is going to come in over here, and I think we're going to see a B-shaped profile. Not quite like that, but that's the idea. So that's what I'm seeing in the volume. Now, interesting is that we have, let's take a look at this chart. It's a correlation between US Treasuries and the S&P 500. Where we're seeing treasuries are moving up along with stocks. Now, that's not always a good sign. That means we have liquidity is not only flowing into risk on, but it's also flowing into risk off. So there's something fishy going on there. All right. I'm sorry. Excuse me. I think what that's mainly saying is uncertainty. We have, you know, global concerns, and now what's surprising to me, you know, we'll get into the US dollar here, but let's take a look at the weekly US Treasuries. US Treasuries are getting quite bullish here. All right. We had a couple of tests of supply. This one, Doji was testing supply. This closed slightly higher, so it was telling me that it's not finding supply. Supply is not entering the market down here. And then we had this last candle, weekly candle, is a bullish confirmation of strength. I think we're going to see stronger U.S. Treasuries. So I don't know what that's saying for stocks, because, you know, when I look at the yield, you know, for the yield to get down to much lower levels are really going to start making stocks look more attractive. So this is an interesting little turn of events here with risk on and risk off. And let's look at the U.S. dollar. The U.S. dollar is, you know, is bearish. This is a longer term chart of the U.S. dollar. Okay, we have this stick sandwich type of, you know, it's a bullish reversal, but it's a bearish continuation most of the time. And now prices come down. We're testing this lower end of the symmetrical triangle. And with these chart patterns, I always say that they like to do false breaks. So we might see a little fake out action to the downside. You know, having a symmetrical triangle in no way, shape, or form does it mean that price is going to hold this trend line. They do break out, and oftentimes it'll break out and, you know, possibly move right back up into the pattern trading range. This is a bearish engulfing candle. The longer to intermediate term U.S. dollar charts are bearish. The euro chart is pretty bullish. So what's that saying is, normally when you have global concerns, you'll see a a push into US dollar. So I don't know if that means that it's just not much of a concern, or now Treasuries are gaining steam on the risk-off safe haven of choice. So interesting turn of events here this week. What else do I want to look at here? I have my trading log. You can see what I'm trading. I have some new plays this week. See, I don't want to turn this video into any kind of recommendations. I am leaning a little bit bullish on the euro for the week. I don't think it's going to get too much more upside, though. Let's take a look at that real quick before I call this a video. Alright, so I've got this up thrust candle, so I don't know if price is really ready for this this trading range yet. But we do have some bullish candles. We have a bull flag that it's broken out of, and this is sort of a rising wedge, not much of a rising in the rising wedge, but I see increasing climax volume. So this is a huge pickup. Previously this is buying climax, and so I don't know if euro is going to make much more ground at this $1.38. This is pretty key level for the euro. So I'm leaning a little bit bullish, but I don't think it's going to get much higher because we see this huge pickup of volume. So if the euro does get up, to $1.38.50, or even $1.39, I think we're going to see a lot of buying climax volume in the euro. That's what I'm expecting. And I think that's about it. Now, as always, you can find me at HotStockMarket.com. You want to check out, for you Redditeers, we have subreddit StockMarket. Excellent place to find information, but of course my favorite is, in terms of forums, this is probably the greatest platform in terms of uploading charts and being able to relay information. I really dig this spot. This is where you'll find my trading log. I have all these images that I've gone over. I will have this, these are my previous charts that I posted. I'll have this all up soon. So that's it. And close out this video just saying, just to recap, I think we will see some little consolidative test of support. See if the prices hold on to the previous resistance, now support. That I think we're going to see a springboard effect into some bullish stock market. That's all I got, and I hope to see you on the boards.